And now we start this way. We start with sales. Sales of the head office is 64,000. For the branch, you can see sales right here. So we'll be doing this quite much. Sales, you can see 64,041. So for the branch, 41. And then we know what to do. Now, the sales for the entire, or rather for the combined business, amount to that much. Okay? Then, there's something that is happening at the branch. Goods sent to branch is sort of a sale by the head office. Okay? Goods sent to the branch. Now, see what the head office is reporting. Is reporting that they sent, and when the head office sells, is income to the branch. To the branch is an expense. You understand that? Now, the head office is reporting that they send goods worth 46,200. All right? But we need to understand this 46,200. The branch received 44. You see that? Okay? But at the end of the day, the head office is reporting that they send goods for 46,200. Where's the difference? The difference is down here. This 2,200 this 2,200 has been sent by the head office, but the branch has not received. And that creates the disparity you are seeing here, 46,200 and 44,000. So these are the received. And here we come and take note of in transit. This is 2,200. For the combined business, we'll have to record this amount that has not been finalized, that is still in transit. 2,000. So far, we can underline. And report that these guys have received the summation of here, 11,200. The sales that the head office has made, they have made these to outside customers and these to the branch. The branch has made sales of 41,000. The combined business is 107. I show you why we don't push this 44 here. We don't push as a sale to the combined business. It's the simple reason that we had in consolidation. In the consolidation, we say if it is intra-group, then we don't account for that. Yet we are accounting for the amount that is in transit. Now, purchases. Remember, it is the head office that is purchasing. Purchases. You can see purchases here. You don't see purchases with the branch. So, purchases, we are being told is 98. By the way, are you following? 475. Are you in the class? Degwa. Caleb. Those are purchases. And then in addition to purchases, there are processing costs. This will not find in the branch processing cost of 25.25. So we can report here, when you underline, that there is the total cost here. Less down here, cost of unprocessed inventory. You are told is 5,000. So, costs of materials sold will be this one here. That 101 plus less the closing inventory and the cost of materials sold is here. Okay, you see that? Now, moving on. The branch, the cost of the materials of 96,000 is a cost also to the combined business. The cost of their materials is 96,000. Now, for the branch, look at this. The branch is not making purchases. What is the branch doing? The branch is receiving goods from head office, goods from head office. The branch is collecting goods from head office. They collected goods, this 44,000. And then, out of these goods they collected, there are goods lost. There are goods lost. Now, where do I get these goods lost from? Now, look here. Stock taking at the branch revealed that goods with a selling price of 1,000 with a selling price of 1,000. goods with a selling price of 1,000. Now, let us deal with the percentages here. All sales, whether by head office or by branch, are made at a uniform gross profit of 25% on the processing cost. It's important to know if it is 25%, it is 25% of what? Of the processing cost. There's another value here, 10%. There's another value there, 10%. And this 10%, listen to the story, the branch only deals with goods from head office. The branch is charged by the head office 10% of the processing what? Cost. The sales, whether by head office, are made at uniform gross profit of 25%. Now, we come and note this. Here we have the working sheet. If we say cost is 100%, selling price is 100% plus what? All right. Is it not so? So these goods, selling price of these goods is 1,000. What is their cost? Given that equation. Someone help us? Someone help us. Are you listening? Hey, how can you miss that? Let's go back. All sales made by the head office or the branch are made at a uniform gross profit of 25% on the processing cost, 25% on the processing cost. And we come here and ask ourselves a very simple question. Let this processing cost be 100%. The selling price shall be what?
800.
Shall be 125%. So you are being told that these goods had a selling price of 1,000. What is their cost?
1,000.
Their cost, the selling price is 1,000. What is their cost?
800.
Equals to 800, straightforward. All right. And what is the transfer price? To branch. What is the transfer price to the branch? Given this statement, the branch only deals with good from head office, charged by the head office 10% of the processing cost, 10% of the processing cost. So we are saying if the processing costs, this is the processing cost. These goods are transferred to the branch plus 10%. So this one is going to be 800 multiplied by plus 10%. So we multiply by 1.1. If you don't know, that transfer price is plus 10%. So is 100 plus 10%, which becomes 110%. And we can express it as 1.1. You get. So these goods are transferred to the branch at shillings 880. These ones that were lost were transferred at 880. So the goods lost is a cost to the branch. We must charge you is a cost to the branch. And to the combined business, the cost is actually 800. See, there's a difference of 80, the profit component, between the head office and the branch. So we have that. Now, we have to determine the gross profit, or we determine the cost of sales. If we have cost of sales, then we should be able to determine the gross profit. Okay. Now, right here, we have less those values. We should come here and less closing stock. Whatever closing stock is, and then after lessing closing stock, we should get here cost of sales. And this cost of sales figure, we are going to put it here and less it from this net sales. We are going to have our cost of sales figure there, and there, and we are going to get our gross profit. So we need to get our closing stock here. Some closing stock figure is needed there so that it helps us to get the cost of sales. And then after getting the cost of sales, we'll be able to get what? The gross profit. Now, how do we go about this? How do we go about this? Let us go back and see. Now, let me show you the approach. Now, we are going to work with, for the head office, we determine the gross profit. Okay? Sales by head office to outside customers equals to what? Read from the question. How much sales did the head office make? Come on. Simeandikwa. Equals to what? Si ndio hii hapa jameni. Why are you quiet? Si ndio hii? So this head office sold to outsiders 64,000. We need to ask ourselves, what is the gross profit? Remember, the selling price, this one, selling price equals to 125%. Now, the profit is 25%. Now, can you work it out? What was the profit on the sale of these goods? Can you speak? Ryogi Zephania.
12,800.
Eh? What are you getting?
12,800.
Why were you quiet? 12,800. Now, sell to branch. Now, sell to branch, it's here. Is this 44 plus the ones in transit? Remember, the head office has already dealt with those goods. So they are selling 46,200. They are selling 46,200. Sell to branch is 46,200. These guys sell to the branch at 110%. You got to ask yourself, the 10% equals to what?
$4,200.
4,000?
200.
200.
4,200. So the gross profit equals to 12,800 plus 4,200 equals to what? Summation of this, yeah?
17,000.
17,000. 17,000. Let's preserve that and move on. Now, let me take you back here to remind you that this branch made sales of 41,000. The branch made sales of 41,000 to external customers. Okay? How much profit did they make from this? So let us deal with the gross profit of the branch. Sales by branch. Okay, sales, they sold 41,000. Okay. Head office profit. The head office would make a profit every time a sale is made, and we say 41,000 multiplied by 25 divided by 125. But then let me remind you something. Markup equals to 25%. Okay? 25% expressed as a fraction is a quarter. Margin is going to be, do you remember the math we were doing last week? Margin is going to be what? Margin is going to be a fifth. So it is this fifth that you are seeing here, a fifth. So 41 multiplied by a fifth, you are going to get 8,200. The head office on the sales that the branch is making, they are making a profit. Of that much. All right. Now, if we go this way, then we can easily say the costs of goods to head office is 41,000 minus 8,200. This will give you, work out this. How much did these goods cost the head office? It costs the head office. Someone please say.
32,800.
32,800. You see. Head office profit on branch equals to 10%. So the head office, if the cost is this, the head office cost on these goods is 38,200. The head office, by transferring these goods to the branch, had made a profit of 3280, which is now 10%. So cost of the goods to the branch do you understand the math? Or simply, we should have taken the cost of 32,800 plus 10% or multiplied by 1.1. This goods is costing the head office 32,800, and they add some profit of 10% whenever they are transferring to the branch. So these goods will cost the branch, someone tell me, 32,800 plus 3280.
3680.
3680.
Yes.
3680?
36,080.
Like that, eh?
Yeah, yes.
So the selling price of the goods that the branch is selling, we agree is 41,000. Now watch this. Let me use different color. 41,000, the selling price. The costs, we're in agreement that the cost is 30 namna hiyo, the cost of these goods. So the profit, what are you getting? What is the profit that the branch is making?
$49.20.
49.20. So the branch makes a profit of 49.20. Remember the head office? The head office was making a profit of 17,000. 49.20 and 17,000. So look at the way we are going to work here. We are going to get 49.20 as the gross profit that the head office is making, and the gross profit of the branch, way, not that way. The branch is the one that is making 49.20. The head office is making 17,000. Si ndio hivyo? All right, all right, all right, all right, all right. Now, can we work backwards until we get closing stock? Now, 11,200 minus what? Equals to 17,000. Okay? Work that way. Yeah, work this way. Get this figure, and then you can get this one. Let's hurry up. What is the cost of sales? And what is the closing stock? So this one we are being told is 93,200. And here, this one is 360, 80. This one we had, by the way, this 360, 80. So you can work backwards and give us the closing stock. Now, 96, what must we less from 96,000 to get 93,200? What do you say? Yes, please. Hey, figures. I want the answer here and here. Yes, please.
189,200.
Wait, what are you saying? 96,000 minus something equals to 93,200. What is the balance?
2800.
Yeah?
2800.
And here? When we talk 44,000, less 880, then less something else here. The answer should be 3080.
Seven.
What are you saying?
7040.
7040.
Yes.
7040 or... So you are telling us here you have 7040. All right. That is the closing stock. Now let us come back here. I show you something. Closing stock combined business. Now look, the closing stock of head office is 2,800. The closing stock of branch is 7040. We have just gotten this one. So for the combined business should be 2,800 plus 7040. But remember this 7040 is inclusive of what we call profit. Because they were selling plus 10%, so there is some unrealized profit. And we're going to get the unrealized profit as follows. 7040 is same as 1.1 plus the 10%. So 0.1 equals to what? The 10% equals to what? So we'll have to less that unrealized profit. So what are we getting, people?
640.
640. So we are going to less 640 here. So what do we get eventually? $2,800 plus 740.
9840.
Yeah?
9840.
Yeah?
9840.
9840.
9,840.
$9,840. Are you sure? 2,800.
9,200.
1. This is 2,800 plus 7040 minus 640, 9,200. So the closing stock of the head office is 9,200. And we'll have to work forwards for the head office, not head office, for the combined business to arrive at cost of sales and gross profit. Can we do that? 9,600, 96,000 minus 800 minus 9,200. What do you get? Quickly, 96,000 minus 800. We should have done this. Si ndio hiyo imeandika 86,000. Then I put it in brackets like that. Utaona inajipea negative. So I get the summation there. And the summation you can see right there is 21,000. The gross profit of the head office is 21,000. Now, not head office, of the combined business. Expenses. Let us come here and look out for expenses. Expenses, right? Selling and distribution. You can see this guy said 9450 and the branch head 1060. The combined business set the summation, which is equals to next expense. We only have one, not one, several others. Lost inventory. The branch lost, you remember, the 880, and that to the combined business was 800. Remember that working. And then provisions for unrealized profit. Unrealized profit on branch stock. You should not have forgotten the 640 and you should not have forgotten goods in transit. These ones, 2200. These 2200, their costs, these 2200 are billed to the branch at 2200. Remember, we have to do the 1/11, and this will give us 200. Goods were charged by the head office, 2200, to the branch, and they usually do plus 10%. So the unrealized profit on these items is 200. Remember, we saw it somewhere in the working up there. So we can now get the summation of our expenses. Control underline. $10 to 90. Then these guys have total of what? Equals to. And this one's here. Those are their total expenses. We got to put it in brackets. Or rather we say that one. The gross profit minus the total of expenses. That is our gross profit. Equals to the gross profit of the branch minus the expenses of the branch. And finally, okay, so far so nice. We have this is the net profit. That's how we get net profit. Okay? Net profit. Here we are happy. We have the net profit. Nice. We are about to conclude. We are about to do the statement of financial position. We are on this thing now. We are on that one. And now, books of head office. What is this? In the books of head office, we'll open branch current account. In the books of the branch, we'll open head office current account. Now let's argue a case here. Who is a debtor, who is a creditor to the other? The head office is sending goods to the branch. The branch is selling and paying the money over to the head office. Who do you expect to become a debtor to the other? We want to establish where the balances should be.
Branch is debtor to head office.
So this balance should be here, balance BD. And here, balance BD. And that's how they have been classified in the trial balance. Look, in the books of the head office, this is on the debit. And in the books of the branch, this is on the credit. So that's why 19,490, 19,490, and here balance BD. Now nisha sahau. Is 13,075. There. That. Now, why is it behaving like this? 13,075. 13,075. With the profit that have been made, we say profit transferred. And the profit is 29.80. Profit 29.80. So far we see that these accounts did not start with the same balance. Why? Because the head office had already credited the branch with things that they have not yet received. And therefore, we are going to charge them goods in transit and it's 2,200, and then cash in transit. There's some cash in transit being talked about. It's here. That the branch has sent, and this head office is not accounting for it. 42.15. So we can now try to see what would be the balances carried down. Let's determine the balances carried down. Guys, we want to conclude the class. One 6055. One. Same both sides 16055. Is it? Is it so?
Yes.
Okay. Now we are ready to do the statement of financial position. Okay. Let us identify the balance sheet items. Capital, okay, drawings, and the other one is debtors, creditors, and then bank. We don't have many items. So let us have that. Remember, from our workings, we have some closing stocks. So, branch current is an asset of the head office. We have just computed this one. Is not an asset in the combined business. You cannot have it. Stock we computed, remember here. Remember here. Do you remember this 2800, 7040, and 9200? So, is 2800, 7040, and 9200. This 9200, we cannot get a summation of those two. Then unprocessed. Do you remember mention of some unprocessed goods somewhere? The last note, the unprocessed goods, 5,000. 5,000. This will be the case for the head office and the combined business. Goods in transit. The head office has dispatched goods at 2,200. The branch is recognizing, not the branch, the combined business should recognize that much. Okay. And then next, debtors. Debtors. They are given this one, no struggle. Debtors. They are debtors to creditors. So is there's a mistake here. 15,48 should be 15,480. Should be 15, pardon me, 480. There's a missing zero here. And then this other one. The next column, this is a credit column, this is a creditor. And then you have 50 what? 680. 5680 for the head office or for the combined business. We can do summation. Equals to those ones we do summation for the debtors. And then there is bank. What are the bank balances? We do the same thing we have done here. Bank. Our bank is here. 7,638.75. 7,600. And next is 38.75. So these two we do summation. And finally, there's this animal here. Cash in transit, which the head office has not recognized. Cash in transit. $42.15. Is it? $42.15 is not affecting the branch, and $42.15 for the combined business. Now we can obtain summations up to this point. Equals to sum. Can you obtain before I do for you? For each column, head office, branch, and yeah. Okay. We have the capital there. Net profit, the branch made a net profit of 96.90. Then we have drawings. of 2750. Now, this will leave us 22,440. And this becomes the profit of the combined business. 22,440 will not work with the profit of the branch. Will not work with the profit of the branch because it has been transferred to the head office and now it is in the current account. So we'll have head office current account. $16 creditors. Creditors, they are here. The head office has creditors of 30,070, this one. Where the branch has 540. Combined is going to be that sum total. And finally, unrealized profits. Unrealized profit is only a head office matter. Branch stock. Do you remember, if you could remember from the income statement, the closing stock of the branch had some unrealized profits? If you don't remember, I can show you here. This 640, that's 640. And then goods in transit, there was also unrealized profit of 200. Now let us see what happens. Okay. That's the way it should have been done. Any question, people? Any question?